there's a much higher likelihood that Tesla specifically is going to be successful at monetizing their AI research than almost anyone else.
So these are perfectly lined up for you. We're talking about energy, FSD, Waymo's new announcements, and other AI stories that just came out that are important for Tesla. So this is Piper Sandler, right? They had this event, two events actually. They held two Tesla events, and they came away with these 12 takeaways from each of these events, so 24 takeaways. So Piper Sandler Analyst recently hosted two Tesla events to dive deeper into companies' evolving strategies in both energy and autonomous driving. The first event was they visited Tesla's new Megapack factory in Lathrop, and the analysts gained insights into Tesla's growing stationary battery business. So they finally visited Tesla's Lathrop. They should have probably done that a year ago, but now that Q1 results and Q2 results are shocking everybody, they realize, this was real. The second was a webinar they had with Elias Martinez, the creator of a community tracker that monitors real-world data from Tesla's full self-driving software. Elias has this website that's tracking FSD, but from community people that are testing FSD. So these Piper analysts, they reiterated an overweight rating on Tesla, price target of $300, and they're urging investors to own Tesla stock ahead of the upcoming Robotaxi event in October. This is great. Finally, they're listening. What's your thoughts on that?
Yeah, I was actually just reflecting on this over the weekend, listening to, there's a lot of commentary from people that I highly respect, like the BG2 podcast, for example, or, we heard commentary from Eric Schmidt over the last few days on the video from Stanford that has now been heavily censored. That basically reflects there's a consensus that we kind of know right now that we're in an AI investment bubble, that all of the big AI, especially generative AI companies, whether it's OpenAI or Anthropic, and Meta's pouring tons of money into this, Google's pouring tons of money into this, Microsoft is obviously pouring tons of money into this, but then even in the startup ecosystem, there's just like tons and tons of money that's being sprayed onto this specific vertical, which is why NVIDIA is just hoovering up, like almost all that money ends up in NVIDIA's pocket, because it takes NVIDIA hardware to do this training, regardless of what style of generative AI that you're doing. But we kind of recognize that this is a bubble, and that a lot of these companies or a lot of these things that we're doing are not necessarily going to be successful. And there's a high amount of risk, if you're putting money into any one of those companies, that money is not going to translate into a product that produces a positive return on investment. So it's interesting to think about the fact that while that is the case, you have Tesla kind of over on the side, and because they are not at the center of this insane AI investment bubble, and they've got automotive, and we've been talking about FSD for so long, and it's still not here. Like, there's a couple of narrative factors that prevent people who are extremely interested in investing in AI to consider Tesla as an AI based investment. And there's definitely risk involved in investing in Tesla for AI. It's not zero risk. I will 100% concede that fact. But in my personal view, there's a much higher likelihood that Tesla specifically is going to be successful at monetizing their AI research than almost anyone else. What I like, OpenAI is a good example. They're going to monetize. They do monetize currently, but can they monetize in a way that is sustainable as a business that offsets their costs? I mean, like, you have to have a pretty compelling business model on the backside of that in order to justify those types of investments. And there are huge question marks around that. And so, because that's the consensus trade, is, hey, we're just gonna throw money at anything and everything that's even attached to this space. I think it's more likely, your risk reward ratio investing in something like Tesla is better, and especially ahead of this robotaxi event, when I think that's when, depending on what they release, we could begin to see that recognition by these AI investors that, hey, if I want to be serious about investing in AI, I need to have at least a piece of that investment going towards a company like Tesla.
That's a very, very good point. I'm glad you made that. It's so important, right? Everybody's throwing money at AI. they don't think Tesla's an AI company. And in fact, Tesla's the only one that is using AI for real world revenue and business model. Everyone else, you don't even know what they're doing and why. So here's what Piper Sandler said, what they noticed after visiting the Lathrop factory. So first of all, they said that Chinese companies are ramping up competition in stationary battery market, but demand remains strong globally. So yes, there's going to be a lot of competitors, but this demand is going to outstrip suppliers very quickly. By 2030, the market will need approximately 2 terawatt hours of batteries, a 20-fold increase from last year's levels. Yeah, that just alone, just imagine what Tesla's going to be able to do here. They'll be able to take advantage of that. As battery technology matures, hardware could become a commodity, and so Tesla won't be able to compete solely on price. Having said that, guess what? Tesla leverages its full ecosystem. It has incredible AI-focused software and inverters, so it's not just focusing on offering the lowest battery pack, but it's actually the full ecosystem to win those contracts. Chinese competitors are largely absent in the US because these are long-term assets that require ongoing service. Plus, you need to build a factory here in the US. They're expensive. They're very heavy. Geopolitical factors and the location of factories pose challenges for Chinese suppliers in the US. That also. So a Megapack can weigh over 80,000 pounds. So you can't really ship them like you could cars. So it's important to have local production. And then we'll talk about the new facility in Shanghai, which we reported on, expected to be online in 2025. They're already 45% progress in building this, and it's just been 3 months since they started. 3 months. So Tesla Energy operates on a project basis, leading to fluctuations in quarterly results, which makes long-term forecasting challenging. Before I continue on, what's your thoughts on the points that's been made?
Yeah, I think that one of the big takeaways, so yeah, it was 3 and 4 where it talks
Right.
about the fact that while it basically is just batteries and some, capacitors, some inductors, like some very straightforward hardware to build from an electronic standpoint. The software piece is huge, and then the ongoing service piece as well. One of the things that Tesla's really doing in this space is they are creating essentially the Tesla iPhone or the Apple ecosystem of products
Mhm.
for a utility provider when it comes to battery storage. And we've seen, or at least we've heard rhetoric. I think I would place a little bit of caution around just 100% believing this story. But the story is that there are utility providers who have purchased patchworks of solutions. They're buying some batteries from this supplier and they're using this person's software in order to operate it. And they've got this service contract with these people over there. And, this very disconnected system in order to operate these exact battery storage facilities at a utility scale. And after they do that, they come to Tesla and they purchase Megapack products, because while they're a little bit more expensive up front, the value proposition that they add over time, because they're so much easier to manage, they just work better. The whole suite of exact reasons why so many consumers enjoy Apple products, even when the Apple product itself isn't necessarily the best piece of hardware, because they have that connected ecosystem. It just works so seamlessly,
Mhm.
and it requires so little maintenance, and all these types of things. It seems like Tesla is building that for utilities, and obviously that's going to be a longer cycle in order to be massively successful. But I think that once the industry consensus is that that is the case, that you'll see them just kind of dominate market share, at least here in the US. It will also be interesting to watch how that market share story plays out in the Chinese market, where they will have, kind of a whole different set of competitive factors to deal with.
So this is just the rest of the 12 points they made about energy. We already know a lot of this. Tesla Energy operates on a project basis, right? So there's going to be fluctuations in quarterly results because you get money as they implement it after they already made their initial sale. So it makes long-term forecasting challenging. Tesla currently imports lithium iron phosphate cells. They did not tell them on in-house production using cattle machines. Tesla's strategy focuses on localizing or in-source production to prepare for various potential market scenarios, right? And the long-term gross margin is still targeted 20%, which I expect to be much low or much higher than 20% if you add in the services ongoing. So the second part of what Piper Sandler did, and we'll get to Tasha Keeney and Waymo, is they actually talked to the guy who created this FSD community tracker. He has this website. 107 users submit data as they are using Tesla FSD because we don't have any other data to kind of follow. Tesla shares safety information, but they don't share as much that they should about how FSD software is improving. So this is the best we can do. So this FSD community tracker, it aims to, how quickly Tesla's FSD software is improving in real world conditions. So the last 6 months, 107 users submitted data using 6 different input methods. Data submissions tend to increase in the 1 to 2 months following the release of a new FSD software version. So participants in the tracker, they think are generally diligent, level-headed, and objective. They use FSD regularly. Of course, there's biased outliers. They can be identified and removed from the data, so that's fine. The latest FSD version, 12.5 in series, can travel 220 to 250 miles between critical disengagements, marking an improvement from previous versions. And he says it's challenging to use these absolute numbers, but what matters is, and so you can't really compare direct comparisons between Tesla's FSD and competitors like Waymo. And we know for sure Waymo is in controlled environments, controlled cities, versus Tesla's being used all around the US and Canada and all sorts of different locations, even unmarked roads. Determining the exact number of disengagement-free miles required for robotaxis is also difficult. So rather than seeking an exact number, just look at the improvement trend. That's what's important. And then they also think that 12.5 has improved. While it's improved, its performance has regressed slightly since its initial release, potentially because Tesla is preparing for the 3rd gen hardware. Before we final the other 3 points, what's your thoughts on those first 9?
First of all, it reminds me that I need to actually start submitting my FSD usage data to the community tracker. That's something that I have intended to do, but haven't gotten started with yet. So I would put this out here to the audience. If you use FSD regularly, you should definitely consider contributing data to this effort so that we have more data, better data. The takeaway from Piper Sandler, I think, is, it's right on the money that it's just really hard to make any sort of apples to apples comparison between Waymo and Tesla, because they're different products, different environments. It's just hard, regardless of how you want to try to compare them. So then going back and saying, okay, what's the rate of improvement? And if there was 2 things that I was wanting to track to decide, is Tesla going to be successful long term in a big way, or is Waymo? If I was looking at Waymo, the things that I would be tracking are, okay, what is the trend of bringing down the cost of their hardware, and the trend in increasing the number of units that they can put on the road, plus how long does it take them to bring a new jurisdiction online? Like, those are the critical things that if I'm an investor in Waymo, that's what I need to know so that I can say, hey, is this going to be a competitive thing long term? Because if your costs are too high, you can't get enough cars on the road, and you can't expand to new geographies rapidly, then it doesn't matter if your solution works from a technical perspective. It's going to be too expensive, and it's not going to reach enough customers to provide a meaningful return on investment. When I'm looking at Tesla, the thing to track is, okay, it kind of works everywhere in North America right now. So it's got a very big, operating domain. So I don't need to know, can Teslas expand their geographies that they're able to operate in right now? What I do need to look at is, are they making progress in their ability to have fewer interventions and reducing critical disengagements? And unfortunately, from outside Tesla, we just don't have this data very well. We hear Elon talking about things, and we get a little bit of data in a few ways, but it's just not very robust. But intervention data is extremely key overall in that. And what we have here with this community tracker data is some of the best information that we have available to us. And not only is Piper Sandler recognizing this fact and referencing this data, we've actually seen Elon even reference this data here recently as well. And so hopefully we get some more better reporting on that. All that said, we are seeing continued progress, and the speed of progress once since we have released version 12 has definitely been faster than the speed of progress before version 12, which is a good sign that we're moving in the right direction. And
Mhm.
yeah, it's just good for Piper Sandler to recognize that. And one of the other tangential things I'll say to this is Alex Potter has been a pretty good institutional analyst on. He's the primary analyst at Piper Sandler on Tesla, and he's been pretty good over the years. Not always the first on any topic, but he's almost always aware of what the arguments are, and
Okay.
he typically comes to solid positions.
So you wanted me to show this because you were saying something like the community tracker, they were able to do something different, but they were able to actually now tell you how much better it is overall. And so 12.5.13 is 14 times better overall, 4 times safer than 12.3.6. This month, 12.5 series already got 1.4 times better overall and 2 times safer than I guess the previous series. How did
So
they
this
know
is
this?
a slightly different form of analysis. If you'll go to the chart, so it
Yeah.
says cross version analysis between FSD versions on the same testers. And so what this person did was they just took the data. So this is not a chart that you can find directly from Elias
Mhm.
yet, I believe. Hopefully he's looking to add this. But what this did was it basically grouped users and said, okay, for this specific user, what is the intervention rate on 12.3.6? Are those interventions critical or not? And then compared that to 12.5 versions. And what we see is this continued progress um,
Yeah, how
in
much better
the
it is.
intervention rate. And so, 14 times better overall, that's a great number that does back up some of the it's like we heard these numbers from Elon, like, 12.5 is 50 times
10
better or
times.
100 times better or whatever whatever the
Mhm.
numbers were. It's like, well, what data is he looking at that shows that? And this, I think, is a good piece of data to give you an idea of what that might have been, because I think you really do need to control for a user, and they're not only are you
Yeah.
controlling for their environment, but you're also controlling for their specific driving patterns and whatever it is that their environment is throwing at them that causes these interventions. And so this is a cool way to look at the data, and I think it's very valid and valuable.